Hello guys, welcome back to my channel Accountancy. Here I am with the new topic today, that is the share capital chapter, which maximally the students fears from. Let's take it from the simplest way of understanding. Here I am not going into the depth of the chapters from the starting, initiating with that, or I am not even considering the situations where it is authorized, registered capital. I am taking a simple question. I am trying to get you how the situation of share capital is to be considered for your journal in case of your situation given. So here I took the case, the company issued 1 lakh equity shares of rupees 10 each and amount was callable as 3 on application, 4 on allotment and 3 on first and final call. First of all, what are these? We need to understand application, allotment, the call system. Take yourself as to be a school or a college. Preferably take yourself to be a college. Okay? Here you suppose that you are a college who have seats for the students to take admission, right? Now in this case, when the students are coming to take admission, they will apply in your school taking the one thing at the initiating point, that is the prospectus. They would buy the prospectus of your college, paying you the registration fees, right? So here think from your self-own point of view. If you are a college administrative person, the people, the students who are applying in your college would be paying the registration fees. So initially the college is receiving the money from the prospectus that is sold to the student. In the similar way, in case you are a company form of organization, as here people are applying for the admission, the same case, the case of the company, the people are applying for the purchase of the shares of the company by paying which amount? Application amount. Which amount they are paying? That is the application amount. So here, in this case, the company form of organization is receiving the money. Okay, what money they are receiving? That is, if in this case it is the registration fees, here it is the application money of rupees 3. And we are taking how many people are applying? Let's supposing the same 1 lakh. So 1 lakh people are paying to the firm, that is rupees 3 per share. Assume it like that only right now. Just make it easier for yourself. So you as a college administrative is receiving the money, right? But when you are receiving the money, you are receiving for a purpose. That purpose was here registration. But here the purpose is application. So what word would be used here? To equity share application account, right? So which particular account is to be credited? That is application account with rupees 3 lakh here. Debit and credit. I am referring it to be the raw matter. Okay. Firstly understand the case. Now when the firm, when the company has received the money, they need to transfer this money to their particular account. Now this particular 3 rupees, 4 rupees, 3 rupees were the division of rupees 10. What was rupees 10? Rupees 10 was the equity share capital of the firm. You take it another way out also. If there is an owner who wants to invest in his business a total sum of rupees 10 lakh, if he firstly invests rupees 3 lakh, then 4 lakh, then again 3 lakh. So whatever amount he invests should be credited to which word? That is capital. You know very well from your sole proprietorship form of business, whenever an owner is investing something into the business, we call it as his capital. As he goes on adding, we add on the word capital. So here also, this application money actually belongs to, this application money actually belongs to which account? That is equity share capital account. Before the capital word, we use two other words, that is equity share, that nothing more is there. So in this case, what exactly have happened? The company form of organization has received because the people applied for the share. So money is received, bank account debit. Which purpose it is received? By the way it is received is application money. So it goes to equity share application account. Then second entry, because we received this application money for the capital investment, so entry becomes equity share application account debit to equity share capital. Now again, come back to the original example we took, that you are the owner of a particular college. Now the people have applied, registration fees is received. Now you will allot the seats, because the people who have applied for the admission in your college should be given the seats. So when you allot the seats to them, that becomes allotment, right? So here, in this case, the people who have paid the application money would be given allotment. Now you know very well, in the college, the students who have applied, when they are given allotment, yes, you are given admission in this college, what they have to do? They have to pay first, particularly let it to be quarter fees or semester fees, let it to be semester fees, right? 6 months fees they have to pay. Now when they will pay 6 month fees, they will get direct admission, yes, you are the student of this college. So now here also they have to pay which money? That is share allotment money. What is the share allotment money? That is 4. But here when they have to pay, firstly who is asking to pay? Firstly, college tells the student, college informs the student that yes, you are given admission in our college, and if you want that seat is given to you, come and pay your semester fees. So here college is asking the student, come and pay the semester fees. So we are making due, allotment due is done. So here also firstly allotment due entry would be made. The allotment due entry is equity share allotment account debit to equity share capital account. When you are asking the student to pay the semester fees, here the semester fees is rupees 4 on 1 lakh shares. So what would be the total value? That is 4 lakh rupees. Here we asked him to come and pay his semester fees. Here semester fees is allotment. So which account is debited? Allotment. Allotment was out of capital. Same way, here the word was application, here the word is allotment. But difference is what? Difference is this, that in the first case, the people were coming with the registration fees, they were paying the registration fees, that means they applied for the seat. And when they applied, the college told them that you are allotted, now you come and pay the allotment fees, you pay your semester fees, means the college firstly asking them for the allotment, and if they are to be allotted, whosoever pays the money, pays the semester fees, would be given allotment of the seat. So this is the case how actually the company organization works on a simple manner, right? So again, then the next, after first semester, when the first semester is finished, again the college would send one message or WhatsApp to each and every parent of the ward that this particular semester fees is again outstanding. So again we are making a call to the parents that come and pay the next semester fees. Here the call is first and final call. So the word used is equity share first and final. Why it is final? Because this semester is finished now. This year is finished. This financial year is finished here over here. So in this case, equity share first and final call to equity share capital account. So we made them, ask them to pay how much rupees? That is rupees 3 on first and final. So how many were the number of shares? 1 lakh multiplied by 3 we received. We made a due for 3 lakh. What we have done? Due for 3 lakh. If this is received fully, then journal would be bank account debit to equity share first and final call account with rupees 3 lakh. So this is how you have to start off with with your normal portion of the share capital. Firstly, you need to practice these many journal entries, only then you can carry along the next part of the chapter. So let's recapitulate over here what we have done. Firstly, we receive what money? The people who have applied for the share. The people would apply with the application money. So bank account debit to equity share, application account. So that application money is then transferred to which account? Equity share capital account. So the narration would be being application money transferred to capital account. Then after that, the next is the duty of the company. Make a due first, give a message first to each and every shareholder to pay which money? Allotment money. So that is equity share allotment account debit to equity share capital. Then they would receive the money, bank account debit to equity share allotment. What was made due? Made due was allotment, so allotment is received. Then we made due for first call to equity share capital. Then when we received it, it also became bank account debit to equity share first and final call. And your full amount of 10 rupee was received 343 on 1 lakh. Firstly 3 lakh, then 4 lakh, then 3 lakh, right? So these 6 specific entries would be there with more additions or deletions that we will discuss in the upcoming videos. This is the starting of the chapter. Thanks for the day. Like, share and subscribe. Accountancy, keep scoring.